Good evening. It was decided to do an event in Dubai on the 23rd of September. It was a Friday. By popular demand, we have shifted this event to 24th September, the Saturday, so that it would be convenient for you people to attend. So I'll be in Dubai on the 24th of September at 6 p.m. Hope to see you in Dubai. Those desirous of participating in the Dubai event can contact us at the WhatsApp number given below or mail to the email ID given below. We will see you in Dubai. Kindly drop us an email or send a message on the WhatsApp number. Good evening. As we did with Dubai, we decided to move the event in Abu Dhabi also by one day to Saturday, so that instead of 30th September, we'll have the event on 1st October. So I will see you in Abu Dhabi on the 1st of October. Those living in Abu Dhabi need not take the pain of traveling to Dubai. We will see you in Abu Dhabi on the 1st of October. Those who want to see me in Abu Dhabi may drop us an email at the address given below or contact us by the WhatsApp number that flashes below. My team will get in touch with you. Thank you.
Hi everybody, welcome back to Be Rich. And I read this interesting article in The Economist. So I thought I'll pick Anand's brain about it because it is completely opposite to what he has been always preaching to all of us. At the same time, they do make a valid claim why they're changing this viewpoint. So, which Anand also has said, that this is a historic change that none of us have seen in our lifetime. So Anand has no clue how I'm going to sideline him now. Blindside him, sorry. So let me get started with this. The article starts, Anand, by saying this: why investors should forget about delayed gratification. The concept which have always been is, as a valued investor, you should delay your gratification, that we invest long term. What the article says is, he says for the last 40 years, like you've rightly said many times in all our platforms, that none of us have experienced this kind of interest rate hike which we're going to see. That this kind of interest rate hike is the first time in our generation we're experiencing. So for the last 40 years, 30, 40 years, value investing made sense because interest rates were constantly falling. As interest rates kept on falling, you would get less value by leaving your money in the bank. So it was better to invest and hold on to it long term and you will get better returns. Now what they're saying, because there's a flip and interest rates now are going to be increasing for the foreseeable future, value investing and leaving money inside and waiting for it to grow is of no more value. You're better off looking for short-term gains than value investing. And it seems to be a complete turn on our famous marshmallow test, which is the centerpiece of the article, where they say this marshmallow test had its own basic flaw, which we know, that the candidates they chose for the marshmallow test, those children, were very skewed. They said if you remove that skew, the marshmallow test really doesn't give a return as it claimed it did. So what do you think about this? Do you think we have to change our perception because of the world perception changing?
I won't change my position. In fact, some of Buffett's best deals were made in the year between 73 and 1980. 7 years when nobody talked about the stock market. When the Nifty 50 collapsed and nobody wanted to stock stocks. So when there is blood on the street is when you buy. The logic is, when interest rates really go up, they have not yet gone up. When interest rates really go up, it starts to hurt stock performances. In two ways. What happens is, profits come down and your P by E ratio, that is how many times you capitalize, also comes down. Therefore, you see a great pain. Therefore, asset prices crack.
True.
The idea of what he is saying is that you make money in the short term will not work, because it's only when the asset prices really crack you get a big chance to buy value buying. In the last 20 years, there have been notable periods between 2000 to 2003, 2007-8, in 2013 in India, periods of 3, 4, 5, and then when Trump got elected for a couple of weeks, the windows have been very small. and the door has shut before the goal, before one could really take proper aim. Because to build a big position basket of stocks, you need liquidity and you need ample time. Very few people with money have been sitting like Buffett, who could move when the liquidity, even when
And
the
the
squeeze,
opportunity came.
when the opportunity came. My opinion differs with this article in the sense that you will get longer period of underperformance.
Okay, agree with you.
Longer period of underperformance. Therefore, stocks will stay cheaper for a longer period of time. It makes greater sense to buy. Among all the stocks I recommended in the last 3 years, in whatever in social media, is one stock called Karnataka Bank. It stayed as an underperformer for a very long time. In fact, it went up to 70 and again dropped back to 35. So there was a period of 2.5 years of underperformance, which gave you substantial time to build a large position. Substantial time without pressure to build a large position. Similarly, in ITC, there was a long time for us to build very big position. Unfortunately, in the broader market, what has happened is the periods of underperformance have been only couple of months or at 6 months maximum. Whereas to build a large position where you are confident and when you want to start striking the ball, you need to arrange liquidity of large magnitude. Such liquidity, unless you are a fund manager, is not
You won't
available.
have access to it.
So, or you should have, like Buffett, pools of money coming regularly. Such pools of money were not available in short periods of time. Now, what will happen is, if the central bank holds its nerves and continues to increase
Increase rates.
interest rates, then you will get a longer period of window to buy stocks which are undervalued, which in the last 20 years, no value investor has had. One. Two, this article assumes that Jerome Powell is Paul Volcker in incarnation. The jury is out whether he is Arthur Burns
Ja-
or the Paul Volcker.
Paul Volcker, sorry.
Arthur Burns was the ill-fated Federal Bank Governor, Federal Reserve Chief, in the period between 1970 to 1980, when Paul Volcker came along. There are four occasions in which he increased interest rates, and without finishing the job, stopped at one time and brought it down, thinking the economy.
He had done the job.
At the first sign of trouble in the economy, he thought he did the job and brought it down. I do not know
Which
whether
way?
the jury is out.
Okay. But wait.
Let me finish. Whatever Jerome Powell has said, he has not kept raising interest rates when the economy is in serious trouble. In fact, he has hesitated to raise interest rates when the economy was booming. When everybody was having a party, he didn't take out the punch bowl.
Correct.
Here is a time when everybody is struggling also, you don't give the punch bowl. The economist assumes that Jerome Powell is going to keep doing that. I beg to disagree. I would like to see some evidence of that.
Okay. In the article, he gives an example. All what he said is absolutely valid and true. I am talking purely as a layman, as a investor just for myself, investing for my own future, because I'm already 40. So I'm talking
I'm
about
55.
I'm talking about for people who are starting right now investing at the age of 35 to 40, who don't have a very long time ahead of them, and who don't have access to a lot of capital. So the article says this, which is very interesting. It says, to see why, first consider a crucial driver on this year's downturn. In place of current profits and growth, stocks offer the big prospect of a bigger one in the future. Meaning, like what you said, you buy and then the value comes in the future. But a dollar in 10 years' time is not worth the same as a dollar today, because today's dollar can earn an income in the meantime. An interest rate of 1%, so we need to only deposit $91 to have $100 in 10 years' time. At a rate of 5%, if we deposit $61, in 10 years' time, that will become $100. That is, he's talking about the American example.
No,
Because they've been sitting at 0% for a very
what
long
he
time.
is saying that fixed equity itself offers attractive return.
Correct.
When fixed income offers he is saying fixed income offers attractive returns.
Correct.
But he's celebrating too early. Even today, interest rates are not just negative, are negative by a huge margin. So let him write this article when the interest rates turn positive in America. Inflation is 8.3. I'm not making it up. Right? Inflation is 8.3. The return on capital is 2.25. You are -6, boss. You are -6. He is already celebrating as if it has become +6.
Correct.
So he is too early. All I'm saying is before it can become +0.5, Mr. Jerome Powell will change his mind.
This is what you feel.
That is what that fundamental question.
Correct. What is on banking on the fact that he keeps ratcheting up the interest rate.
Yeah, but there is no evidence that he will do it.
He's only been saying.
Yeah, from last 20 years, no central banker has done it.
Yes, nobody has a stomach for it.
Yeah, nobody. After Paul Volcker, nobody has done that in 40 years. How do I believe unless he does it? And markets are celebrating even before he says I will do it. Markets assume that he is going to do that and they are celebrating.
Correct.
So let me see first a positive interest rate first. Like you said correctly, even if there is no month-on-month growth in inflation, inflation will come down to only 6 on March 31st. But even last month, even though the price of gasoline fell, other prices went up to compensate for it. So there is no question that inflation will be more than 6 on 30th March. Is he still going to be hiking rates at that time? He said he would. But whether he will do a 0.75 three times for March is something I want to see. He did a 0.25, a 0.5 and 2.75s. If he does a 0.75 now, he has done 3.75s, 1.5 and 1.25. The same guy said 1 year back, inflation is transitionary.
Okay.
Now, how can I believe his words?
Fair enough. So let's bring all this to Indian context. In Indian context, our guys believe there is no inflation.
Yeah, but if price of rice is going up, like what my friend Partha told me, who's growing rice in 30 acres, price of rice, ordinary brand, has gone up 30% over last 2 weeks. So, and that's in South India. In North India, it's gone even higher. What do you mean there is no inflation? The government believes there is no inflation does not mean there is no inflation. For 16 months in a row, wholesale price index has been in double digit. For 8 months in a row, CPI as announced by the Reserve Bank is above their maximum limit of 6%.
Fair enough.
The fact that RBI has not increased interest rates has made it worse. So how will I put my money in fixed investments in India unless I have a bond which is giving me 9+%? It doesn't make sense for me to invest in. Why will I delay gratification?
Fair enough. No, meaning why would you not?
Why would I not delay gratification?
So, in terms, okay, we've seen FIS selling because of the global macro thing. They're selling and moving
No,
out.
the FIIs are simply selling because, like I explained to you last week, in the month of August, your trade deficit is 2 times what was it in last August.
Yes, but leave the FIS alone. We've spoken a great deal about FIS. I want to know the domestic institutional investors. What will create them for them to move their needle? What do you think you will like to see in the market which might trigger something in the domestic institutional investors?
Because see, the domestic institutional investors mainly LIC and PF. Already the mutual fund money has started to dry up. What will happen is The FIs will sell more than what
These guys
these guys buy.
can absorb.
That's when the pressures will start.
At that point in time, you might see stop sign being issued.
18,100 to 17,500 cable 2 days.
Correct. While if you look in reverse, how long it took to get from there.
Yeah.
Yes. If you see those number of days, it's far more.
So if FIs continue to sell, how many? You have already bought down, you have already sold $90 billion.
Yes.
You will sell another 450 billion. You sell after that, what will you do?
This is true also on individual shares. If you look at like an IndusInd Bank, from where it was pre-pandemic, 2000, and where it fell, it still hasn't come back to.
No, it's not come back to the same level.
Correct. So there is still a lot of.
All I'm saying is there is a disconnect between the where the stock market is and where is the actual economy is.
Okay.
So stock markets are slaves of earnings and are slaves of actual facts.
So we can safely conclude saying that value investing is still something to depend on, considering all the uncertainty.
If you are willing to wait patiently, value investing is something you can bank on. If two people who are 99 and 92 can bank on value investing, two of us who are 55 and 46
definitely should.
You should look on bank on value investing. Anyway, good topic.
Yeah.
Thank you for bringing it up, and you can close it.
Yeah.
I can close it.
Yeah, of course you can always close.
Okay. Thank you for watching Be Rich. It's a good video. I hope you enjoyed it as much as I did arguing with my brother. Please do not forget to subscribe to my channel. Turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.